Greetings, members, one and all of the Salivation Nation. Well, a stock share for a huge silver mining companies falling could lead to higher silver prices, and it also, based off what we're going to find out in this story, could potentially lead to a narrowing of the gold to silver ratio. Let's take a look. This article comes to us from mining.com, and it's Pan American Silver shares slide on 2018 production slightly below targets here. Shares of Pan American Silver, the miner that recently acquired precious metal miner Tahoe Resources, creating one of the largest silver producers, fell in pre-market trading after it reported a full-year production was marginally below guidance. The Canadian miner said it had churned out 24.8 million ounces of silver last year, just shy of the 25 to 26.5 million ounces expected. Gold output, however, exceeded the company's lower end of the 175,000 to 185,000 ounces target, totaling 178,900 ounces. And so that means that since the gold output has exceeded, obviously, its target, although it is admittedly in the lower end, it's kind of in the middle of that range there, with silver churning less, and with depending on what the demand will be for silver for as a commodity for industry and the like, it could potentially cause silver prices to go up, while gold prices remain steady or maybe even decline a bit. That's the obvious take from that, but certainly there's going to be a lot of other factors that come into play in that push and pull that I talked about in a previous video, that if there's not as much demand due to less economic activity from sales of electronics and the like, then we may not see that tightening. But we'll see what happens. The company's shares plummeted more than 7% to $13.18 in New York by 10 o'clock local time. We're trading a 1.88% lower to $17.79 in Canadian dollars in Toronto around the same time. And people have asked me, should I invest in mining companies? And this is one reason why, it's just like any other company out there. And if their production, they make profits or price increases and the like, then that's where it's going to potentially have a negative impact on the stock and a positive impact on precious metal prices. So in a sense, you'll be losing out if you invest in these companies. I kind of tend to stay away for that reason. It's just as much of a gamble, in my view, getting involved with the silver or gold mining companies as it is any other company. It's a tough business, for sure. 2018 was a pivotal year for Pan American with low cash cost, strong cash flow, continued improvements, and Morochoca and Huron positive impact for the bottom line for our La Colorada and Dolores expansions, President and Chief Executive Officer Michael Steinman said. The executive said the acquisition of Reno, Nevada-based Tahoe Resources is expected to close at the end of February, which will effectively double its silver reserves. Pan American, already the world's second largest primary silver miner, expects to produce between 26.5 million ounces and 27.5 million ounces of the precious metal this year, with gold output in the range of 162,500 ounces to 172,500 ounces. So if you look at that between what they were expecting from silver last year of 25 to 26 million, it's a little bit more for what they're expecting for this year. Will they meet that target? Who knows? If they fall short, then it's going to be a little bit of an interesting situation. But considering their merger and the like, and they're adding to their reserves, maybe these numbers might need to be studied a bit more. And gold output is, their expectations are a little bit lower because of the previous year. So that could possibly mean a potential argument that perhaps we have surpassed peak gold, and we'll see how that plays out in the coming year to see where that is. And that's just it. When you take a look at these numbers and where they are and what they're predicting and what's going to be happening and what they're holding in their reserves, there's a lot to take into consideration. And there's so many different factors that come into play with production, which leads to supply, which from which there is demand from that supply. And sometimes it's just as simple as that, supply and demand. Obviously, there's different factors at play, but when you take a look at platinum, and it's a rarity, but yet its demand is stifled. So therefore, its price goes down. Although I believe it is undervalued right now, and you'll see why. The reason why is partially because you'll find out very soon in an unboxing to come. But nonetheless, this is quite interesting news. It goes on to say that weak silver prices have taken a toll on miners' shares in the past weeks. The precious metal just completed its worst year in 3 and has already erased its 2019 gains. And so this is something that, in part was covered in a prior video, but this news today with their shares going down because of it and how things will play out. This is a big company, a big acquisition, and that's what happened. A lot of these mining companies are merging and the like. So we'll see how this all plays out. Nonetheless, I think probably the bigger demand on silver and gold pricing as to what those prices will be is more measured by economic factors, geopolitical tensions, and the like. Gold and silver never go to zero, but they're often ignored in times of economic, euphoria. And when things are going well, people tend to forget about the safe havens. But if you're looking for a great deal to protect yourself as an insurance policy, gold and silver are it. And the best time to buy is when it's low. And most in this community understand it. I can't tell you how many times when I talk about silver pricing, when it goes up, people are saying, I wish it would go back down so that I can buy more. And when people say that, I know they have a complete and full understanding of what the metal is about and how it is there to protect us against economic instability. And we want cheap insurance policies when it really all is said and done. And when you look at numbers like this, from the expected production to the realized production for silver in 1 year and what they're expecting, which is even more in the following year, well, I guess if they pool their resources, maybe they will be able to meet this, but maybe not. I've heard conflicting stories about, easy picking silver, and silver is a byproduct of other metals. And if there is less demand for those other metals, then that means there's going to be less silver. And even as such, that if silver is a primary mined metal, it's going to be more pressure on the mines from which, especially in the Americas, South America and Latin America, and where their main metal to mine is silver. It's got more pressure on them to produce to meet that demand. But nonetheless, it's all fascinating. It's all interesting. And really, all we can do is just continue to acquire as we can afford and move ahead. But interesting news, certainly to measure here and take a look at, because it will give us a hint of possibly what could happen in the coming weeks with silver prices and gold prices. But post your thoughts below about this story, about Pan American Silver, huge company in mining in Mexico and Peru. And what are your thoughts about what this could mean for the silver to gold ratio? Will it tighten up? If these numbers at the end of 2018, if there's it's squeezing on demand and there's a deficit of silver out there for what's needed for electronics and the like. Post your thoughts about what you think about that. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, comment, and subscribe.